Hey everybody, Preston Brent here with our Trader User Group Weekly Roundup. This is for the trading week ending September 25th, 2015. I'm going back to the original post that I did about 3 weeks ago or so, a little bit less than a month. And what I've got on the screen here is the monthly chart of the E-mini S&P 500 futures. And it's important that we do this because the markets are in a little bit of a confused state right now. And looking at how the markets reacted on Friday, people may be, very timid on any type of bullish up move, which I can clearly understand. And what I had talked about 3 or 4 weeks ago is I titled my post "The Good, the Bad, and the Ugly," and I said there's three different scenarios that no one really knows for sure right now which one's going to play itself out. And I wanted to just kind of go back and refresh your memory on that. Now, what I did in this monthly chart, you can see I've got the lows down there that were made back on March 6, 2009, and I capped them up at the highs up here. And these are the futures when we made the highs here earlier this year at 2134 on the E-mini S&P 500 futures. And then you can see I've got and we'll see this more clearly when I come into a daily chart and a 2-hour chart. But right now you can see these Fibonacci nodes that I've got in here. I've got one node set like this, and then I've got another node that's based on this monthly that goes all the way back to the 2009 lows. Okay, so let's take a look at this one first. Let's look at this monthly fib, and then just kind of see where the scenario could play out that would make this a really ugly period here for the markets. You can see here that we've had this huge strong move up, and we've got a 1 leg, 2 leg, and then a 3 leg here, and we're working on a 4 leg down. And you typically get a 4 leg like this, and then you have a final thrust up for a 5 leg, and then you run into like an ABC pattern, and then the market says, do I want to go higher? Do I want to go lower? Or do we just stay in this ABC alternate pattern and we kind of stay choppy for a while? And of course, no one knows. In fact, no one knows if we're going to get this 4 and 5 leg pattern here. But we're clearly in the process now of what's looking like the formation of a 4 leg to the downside. Now, in order to kind of just get potential support points, as I said, I've got a fib here from the lows to the highs that go back from March of 2009, March 6, 2009, all the way up to the highs made this year, 2015, a few months ago. And we can see a common pullback point that I love to use on very strong bullish markets is the 23.6. And you can see that sitting right at 1789.04, which is just a few points south of the October lows that we made around 1813 back in October of 2014. And you could see that that is a very valid support point. So we could come down, shop around, find some support at that area, and then slowly, kind of work our way back up like that and give us, a 5 leg somewhere up in that area there. This would give us a 4 leg here. And then once we hit this 5 leg, we would probably have a MACD that would look something like this, and it would come up with a 5 leg somewhere in that area, and then a true 5 leg would give us that bearish divergence. Okay. Now, I'm not saying that's what's going to happen, but this would be the what I would call, and there's 3 different scenarios, as I said. The first scenario is the first scenario is the good, and then the bad and the ugly. The ugly scenario takes us all the way down to the 50%, somewhere between the 38.2% and 50% fib nodes. Now you can see the 38% fib node, if I were to extend it out, puts us right on the highs made in 2007. Okay. In fact, if I were to include all of the chart on here, and let's just go back to the dot-com bubble days here, right? And let's just zoom it in a little bit. And then I were to extend that line out, you'll see here that from this 38% pullback, which is a common fib node, it takes us just like that. So it incorporates these here, and that would be a logical support point. And it would still give us a longer term secular bull market, right? I mean, we could go like this and then boom like that, and then by the time we hit it, we're into 2016, possibly even all the way out to 2017, because each chart is a monthly chart here. So, or each bar is a monthly, represents a month in time. So we could see this as a very likely doable scenario, and in between then we can actually come up and take out the 2134 before we come down. But I would call this the bad scenario. All right, that would be. But in the secular perspective, you know, we would break this upslope and trend line. We would get a rather larger pullback, find support here, and then you see buyers come in. So that would be, but that would not surprise me if we got that, guys. So I'm just giving you guys a heads up on that. Now, the other scenario, which I would say would be the bad scenario, which is better than the ugly scenario, is again stretching this out. We come down and we hit the 23% pullback area, right in this area right here. Okay, so that would put us right around the October lows 2014. And we gather support, and then we kind of move back up in this direction like this, and perhaps we chop around for a while, but that would be what I would consider to be the bad scenario. And then the good scenario is we've got to come in a little bit tighter. I've got to take it down to a daily time frame. And let me just clear up the screen here for you. And then in a daily time frame, now you can see the daily fibs that I've drawn on here from the lows, and this long green line down here is the monthly, right? But the good scenario would be having us finding support at this roughly area right here. You can see that we've got fairly nice support. We've done a double test here right around the 1900 area, just north of 1900, but it's at the 0.236 fib again, extension off the lows right there. So 236 seems to be a really interesting number. You can see we moved up hard, we moved down, we did a test, hard, moved down and did a test here. So now the question is where to next. Now we'll move into a 2-hour chart here. I'm going to come in and just take it in even more. As you guys know, I love to do 2-hour charts, just to kind of do an x-ray view, I guess, if you will, of a daily. And one thing I wanted to show you that just kind of stuck out in my mind was something like this, you know, where we've got that, and then possibly one of these kind of moves like this, right? And if we get that, that would give us a reverse head and shoulders. Of course, the measuring objective would be from there to there, which takes us from about, it's about 43 points. So if we were to break this area here, we just add 43 points to it. And that puts us right up again around that 2000 area hurdle that we've seen and felt so well. So I don't know if this is going to play out either. Remember, this is our good scenario support point right around the 1900 area. All right, so we came down, bounced very hard off of that. We came right back up, and now we're coming back down again. Now this resistance area here happens to be a longer term on a daily chart upsloping trend line resistance, and I'll show you that here when I put all of my let's say all my drawings back on the chart. Now you can see that green line where we moved right up to, which was resistance there and I mean support there and resistance here. If I come out to the daily, you'll see what I mean. There is the upsloping trend line right there. It looks like a wedge. Remember, a wedge basically is a bearish wedge. Is the lower line is moving at a higher vector than the upper line. Higher vector meaning it's eventually, as you can see right here, they meet only because the lower line is moving at a higher velocity in the upwards direction than the higher line. So it's a wedge, and the odds favor a break in this direction. So we're getting a little bit of an interim support right at that area right there, which is the roughly 1900. You know, I said that would be the good scenario, as I said. Okay. And notice this is one of those rare instances where I was given all three scenarios were to the downside. I did not have a good scenario to the upside. Normally, a good scenario would be 1 or 2% up, 3 or 4% down would be the bad, right? But in this case, all three scenarios were down. But the good down scenario was not a very far move like that. The bad scenario, as I said, takes us down to this zone right down here that you can see. That would be the bad scenario, which takes us down to our October lows right in here, all the way down, by the way, to about 1800. All right. And that is about 127 points, maybe 120 points south of where we are right now. That would be the bad scenario. And of course, the ugly scenario takes us down to roughly 1574, 1575, which would give us roughly the peak made in the dot-com bubble, roughly, and the 2007 peak. So which scenario is going to play itself out? Nobody knows, and if they tell you they do, I'd tell you they're on crack cocaine. All we can do is look and see what is the most likely scenario. Near term right now, we got momentum to the downside. If 1900 holds and it starts moving up, I'd look for another retest on this line right here. Remember what I said? If we get that reverse head and shoulders, then we're going to come right back up into this area right here for the test, which is right around 2000, which seems to be where there's a lot of sellers lurking up in that area. But there also seems to be a lot of buyers down in this area. So right now, until then, we're kind of stuck in this range. In fact, I could take everything off the screen again. Let me clear it up and get it off the screen, and then give you another look in another way and just say, well, right now we're kind of stuck like this, right? That is the lower side, and this is the upper side. One of these is going to break. The odds favor a break to the downside, which would give us the bad scenario right around 1800 to the low side. And then I think the charts do not suggest we're going to go much lower than that, which would be the 1813 lows that we made on that crazy Monday. But the odds do favor a break to the downside. And then we would just merely take the measuring objective of right up here, roughly 1997, down to here, 1900, roughly, subtract 97 points, roughly from there, and that takes us right down to the 1800 level, roughly, okay? That is the bad scenario. So right now, the day charts seem to indicate we're going to get the bad scenario, not the good one. All right, so you need to check your portfolios and make sure you're set up that way, okay? I ended the day short the NASDAQ, and I was long gasoline futures, and I'm long the Australian dollar. There are a lot of other plays that are starting to surface out here, and I'm talking to our members. We got, just as a reminder, our members, we've got a session this Sunday night. We're going to go into next week and key price levels to determine, which scenario starts to become more favorable. We're going to go through these and review them with everybody. And we've also got some things starting to set up in the currency market and the energy market that I think are going to really start to play themselves out. Okay. All right. So if you're not a member of our group, I highly encourage you to come in and check us out. We've been playing this year very well, or at least as far as the calls we've made and the directional movement and the bias of the markets. If you've been watching this blog on a weekly basis, I do it for free, but you can get an idea of just where we are and what we're doing. But if you're not a member, you're missing out. I'd highly encourage you to come in and check us out. With that, have a great weekend, everybody. It looks like fall time is starting to settle in the Northern Hemisphere. For those of you in our Asian markets in the southwestern Pacific Seas, your summertime will be rolling around pretty soon. Same thing with our Latin American southern markets. So you guys getting through the winter months and getting ready to come into summer, although some of you guys have summer year-round. Have a great one, everybody. And members, I will see you in our Sunday night session. Take care now. Ciao.